Hi, I'm Asif Farouk of Finextra and we're here at level 39 with Paul Hawtin of Cayman Atlantic. Regarding Cayman Atlantic, can you give us an example of the kinds of social media data that you're actually pulling down?
Yeah, sure. Well, we have access to a broad spectrum of social media data vendors, but we focus on Twitter. That's our main source. And I'd say at the moment, our research is probably 80% Twitter, 20% Facebook. But in terms of our actual trading, live trading, we're using 100% Twitter information at the moment.
How is that data actually used?
Yeah, I can give you kind of like a high-level sort of overview of how we use it. We're looking at two things really. One is sentiment analysis. So we're looking at following global sentiment, how the world is feeling at any one moment in time. And then in turn we can then trade major equity indices such as the FTSE and the Dow Jones. We then also look at sentiment around brands, companies, and break it down into those individual components so we can trade individual companies and take positions based on how sentiment's changing surrounding that company. And then the third thing is event detection. And this is something that we've been working on more recently, and Twitter provides a really rich source of real-time data which can allow us to be alerted to breaking global events, whether it's geopolitical, whether it's news. We can get a heads up, if you like, before the major news wires get hold of that information and then put it out for broadcast. And that obviously gives us an advantage in terms of timing.
So I know you from Derwent Capital Markets, obviously, but how has the business changed from then to as it is now as Cayman Atlantic?
Well, Cayman Atlantic we're an investment management firm similar to Derwent Capital Markets. The biggest change here is that when we launched Derwent back in 2009, 2010, we were still in a very, very volatile market, and we were a very young asset management firm looking to raise assets under management as fast as we could. The problem was we couldn't raise sufficient funds to make the fund commercially viable. So Cayman Atlantic, we're now in a less volatile market at the moment. There's a higher appetite for more innovative type investment vehicles such as ourselves. But the big difference is that our product is what we call an MTO, or a managed trading account. So these are individual private accounts for high net worth or sophisticated investors. And the great thing is that we don't have to reach a critical mass, which you do with a fund, to make it commercially viable. So we've taken that market risk out of our business model, if you like.
And what kind of returns are you seeing at Cayman? Is it as expected?
Yeah, we're pretty pleased actually. We delivered a 23.77% return in 2013 last year, which was about on target for what we're looking to achieve, which is around 2% a month. January was very good this year, just over 1%, and February is looking good as well.